Hello everyone, it's Brian Olynick and I want to welcome you to today's presentation where my two special guests are going to pull back the curtain on the best ways to obtain alternative forms of financing for real estate investing or any type of business you might be in. During this webinar, you'll see how so many clients have already benefited from this type of funding, with most of them receiving anywhere from $30,000 to $100,000 within the first few weeks. So before we get started, I want to first introduce our presenters for today's webinar. They have created over $250 million in funding, and they've been helping thousands of investors and entrepreneurs across the country attain large amounts of low-interest capital. Their names are Ari Page, who is the Chief Executive Officer of Fund and Grow, and Mike Banks, who's the Chief Operations Officer of Fund and Grow. I celebrate these guys and how they are educating and helping so many. They have a great team helping clients get results month after month. Are you excited about today's webinar?
I'm personally really excited to be introducing this leverage information today because there's so many ways that people can make more money with their already very powerful business models. And so if we get people access to funding, especially if it's unsecured at an extremely low interest rate, then we can really add to their overall bottom line. And I also have, like you mentioned, Mike Banks, our COO, here with me.
Thank you for having us today, and thank you to everyone who joined us. We're super excited to be sharing the results that we've gotten for your clients last time around. So it's going to be a great webinar.
Last month we hit 5 million. There's quite a few months of this year we've hit 5 million. And so that funding goes to our client pool. One client may be getting 200,000. One client may be getting 100,000. For a situation, they may be getting 50,000. They're solely focused on unsecured business loans. We're also going to teach you about corporate credit. Now, corporate credit is not secured. It's also it's also non-recourse. So we have quite a few things that we're going over today. However, the loans that we generate on a monthly basis, being unsecured, means that it's safe for you. So this way we can avoid other types of loans that could be secured off of your assets or secured off of your business. So what we want to do is we want to use unsecured loans that are extremely low interest rates so that we can generate the highest ROI possible on the type of funding that you're getting. I do have an exercise I'd like to do with the attendees here as we get started. But we're really excited because we're so passionate about informing people of this amazing resource. I mean, we've had so many students who've walked in the door with us and they couldn't obtain a decent loan on their own. They couldn't even get $25,000, to save their life. And then by the time they're walking out from our program, they have $250,000 in funding. And so this is really going to be eye-opening to a lot of people on the call. Really make sure that you're focused on what we're covering today, and perhaps the best about today's web class and what makes this training so different from any webinar or web class that you've been on in the past is that we're going to show you how to start the process of building up to $250,000 of this type of funding, and how you can get as little as $100,000 in sometimes like 30 days. We have clients that in 2 weeks, 3 weeks are getting, in many cases, $50,000, $75,000. But do keep in mind, this webinar is for training and educational purposes, and if you take this project on by yourself, make sure you're ready to put in the same amount of time and research that our consultants will put in on your behalf. Otherwise, your results will be limited in comparison to what the case studies that we're going to be going over today. We're going to be bringing up case studies of other students, what their credit scores were like, what their business credit was like, how much funding they got. We're going to cover all of that on today's webinar.
Great point, Ari. It's like anything else. You can do it yourself, but it's going to be a good amount of work. Many of my contacts approach me looking for money that is quickly available to get their deal going or just grow their business. Frankly, it's ideal to have $50,000 to $75,000 just to prime the pump, in my opinion. It's also great to use business credit so you can avoid investors and use less hard money. I know you guys will be showing the credit gain later, which is mind-blowing. It is also very impressive how much capital at zero interest you guys are able to acquire for your clients every month. You mentioned it before we started. Did you say 5 or 6 million a month?
Yeah, you're completely right. I mean, this year alone, we've helped thousands of real estate investors and business owners. Last year, we did 64 million in funding, and we're consistently bringing in around 4 to 5 million per month. And this year so far, we've already brought in 7 million per month.
7 million a month? That is staggering growth and momentum. Now, to everyone on the call with us, I've seen the funding clients have received after they attend this webinar, so I fully trust their advice, and so should you. I am certain they are the best in this space with countless testimonials that further support their expertise. We're going to show you some of the approval letters, clients' case studies in just a bit, and keep any questions ready and send them in as we go through the presentation, because we're going to open it up for the live Q&A discussion. Plus, there will be some special bonuses that Ari and Mike will be giving out for those who stay on towards the end. And as you know, I'm adding my special personal gift, whether you choose to join Fund to Grow or not, so stay on until the end. Also grab a pen and paper, take some notes, and try to keep your eyes off Facebook, no texting if that's possible, and read your emails later, please. Ari, why don't you take it from here?
So as we get going with the presentation today, I can see so many people have joined us. I just want to connect with people and just move right into the presentation. So if you could come to the questions area, I have a few different questions for you. But the first question that I have for everyone today is, how much business credit do you need for your business? So come to the questions area. Let us know how much funding you need for your business, and also what industry or specific venture are you using the funding for. But come to the questions area. Let us know how much credit you need, how much money you need for investing, and what industry you're in.
And remember, folks, you'll be able to access the cash on these credit lines. So if you're in real estate and you're looking for some funding to do more flips each quarter, or whatever it is that you need money for, you will have cash access on these credit lines.
So Joseph says it's never enough. I couldn't agree with Joseph anymore. When you have a powerful business model and you see the market the way that it is right now, you can never get enough funding. So thank you for sharing that, Joseph. So Christopher's looking for money for real estate. Rowan is looking for $300,000 for real estate. Ray is looking for $150,000 for wholesale and rehabs. Camellia is looking for $100,000 for a real estate and home improvement company.
Awesome. So Don is looking for $175,000 in real estate as well. Calvin needs a line of credit of at least $100,000 to start investing in real estate. Alistair is looking for $250,000 for fix and flips. Phil is looking for $250,000 for rehabs and flips also. We've got a video production upgrade. Looks like Alan's looking for $50,000 for a video production upgrade of some kind. So whatever it is that you're looking for, whether it's for marketing, whether you're planning on doing another 3 or 4 deals per quarter, whatever it is, you need the funding to do that, especially if you're trying to manage multiple deals at once. And that's the idea. When you're in real estate, you need to have more than one deal going. So you need the funding to do that. Another $250,000 for Robert in real estate. Rifat says real estate, but out of country as investor. Is funding available for foreign investors? Yes, and we'll get into that more.
So in today's training, we'll be discussing how to effectively utilize zero-interest business credit, non-recourse corporate credit, and various other tax-free loans. Now, more and more business owners and real estate investors are starting to utilize this type of funding, but quite frankly, this is an extremely underutilized resource, and we want more business owners and people out there to be informed of the way this works. Now, just by virtue of being on today's call and learning about business credit, you're going to have a competitive advantage over others in your marketplace. Now, Bloomberg says that 8 out of 10 businesses fail within the first 18 months simply due to lack of funds. So one of the links in the chain to your business being successful is having access to funds. And so this is a really, really important aspect to business credit and to your business model is using business credit. And if you're thinking and wondering, well, do I really need it in my business? You know, I have a cash positive business. I'm making a lot of money. Do I really need it? The question to ask yourself is, do you need more opportunity within your business? Would you like to make even more money and expand even faster and leverage yourself, your time exponentially? Because you can do this with no tax returns. We can not even worry about the debt to income ratio. It's important to understand that the credit is unsecured. So all of these aspects, the fact that no partners are needed if you don't want to. If you want to use partners, you can do even more. No investors are needed. There's cash access to all of this type of credit. So you need access to this type of funding because you need to expand your business model. No matter where it is, you could make more. If you're not growing, then your company is dying. And that's a really important concept to understand. If you're just flatlining and you're just doing about the same that you did last year, then in essence, your company is slowly dying. So in order to continue your onward growth, you may need access to funding as you move along. And there's many different uses for this type of funding, from real estate to new investors replacing high interest loans off their personal credit, to experienced companies financing marketing campaigns, paying off equipment, investing in training programs. There's so many different things that you could use this for in your own personal life, as far as separating business and personal expenses from a business owner standpoint. And of course, there's investing in passive income generation programs. We have one of the affiliates we work with will show you how you can generate up to $100,000 in 1 year if you have $100,000 of seed capital, and how this gift keeps on giving back year after year after year, and how to expand that model. So passive income generation is huge. Obviously, having seed capital is important, and the ability to expand, to be able to hire new staff, expand your model is one of the most important aspects in business. And of course, any type of online marketing that you're doing now. Why is it important, to do all of this? Well, it's really important to expand your business model, to not flatline, to not just keep on doing what you've been doing before. And this really came into play for us in our company as we were growing Funding Grow. You may know us when our company was called Credit Card Builders, and you can see I'm here on the right-hand side, and that's my wife, Maya, on the left-hand side, and our two children. We're down here in Florida in the Tampa area, and we have around 20 employees that are delivering this service every day. We have many contractors that are outside of our office as well. This is us on a recent mastermind cruise, actually, and as you can see, the kids were absolutely loving it. But we do these mastermind cruises from time to time. My kids are, one of them is 12 years old and the other is 11. This just gives you a little picture who we are. And also, Mike is also with us. This is him on a recent fishing trip.
Yep, that was on a little mini cruise I went on, and I caught myself a nice 35-inch snook. That's something that I really enjoy doing, is getting out on the water and just getting in some fishing, do a little reading while I'm out there. It's just something I really enjoy doing.
So yeah, Mike's a real outdoorsman and also a scholar. And he is our COO, as we already introduced earlier, and he runs the office day to day. So you got to see what we look like and a little bit about us. Fund and Grow was created in 2007. We were a mortgage company before that, and we had created hundreds of thousands of dollars in loans. We took those 32 years of industry experience and compiled it together into Fund and Grow, which is a business credit resource. And the reason why this came to be was because of the way that the banks were lending during the whole downturn of the market. So the way that the banks were lending dictated the lending sources that we were going to, and now we've served literally thousands and thousands of clients, creating hundreds of millions of dollars of unsecured funding. And we're happy to work together in the education of small businesses in being able to do this on their own. So for those who have joined us today, we have a few bonuses. This is one of the bonuses we're going to give away to everyone who's joined us for the call. This bonus will allow you to keep tabs on your credit report at no cost to you. So you're going to be able to check your credit report out. You're going to be able to simulate changes on your report to see if you'd like to update things, and we're going to show you how these work. We're going to cover these concepts that are overall important to building business credit. Now, some folks on the call may have already built some of this. It may all be new. But what we're going to cover today, first, is the formation of a lendable entity, then building business credit and negotiations and appeals, and what does that mean, as well as establishing non-recourse corporate credit. And what's the difference between corporate and business credit? And then getting cash from credit that's not a cash advance, and that's huge and that's powerful. and then, of course, funding and growing your business. And this is what we're going to be going over today. And first, let's start with Kiara mentioning how much funding she's got through this system and this way of building your funding. So on her first round of funding, which was within the first few weeks of working with us, she had already received $75,000 in funding. And then on the second round, she was up to $117,000 in funding.
Yeah, and here's Randy. Randy Larkins is a client of ours who received over 180,000 within his first year. He's actually on his second year now, and he's exceeded the 180,000. And I actually recently spoke with Randy, and he talked about how he's using the funding for his auto dealership and how he's also recently gotten into real estate investing, and he's doing a flip every 90 days on top of his successful auto dealership, and he also owns a pawn shop. So if you look on the right-hand side where you see the screenshot of the credit gained, you'll see that in the first column there's a lot of zeros, and in the second column is where the larger amounts come in. And we're going to get more into detail about that negotiations process and how all that unfolds in our program.
And it's really important as you build your foundation to start with a lendable entity. That is really the foundation of your business. And so while everyone on this call, or many folks, may already have an entity or a business, an LLC, S Corp, or C Corp, whether or not that entity is lendable is a completely different story. So there's a few things to really keep in mind when it comes to an entity. And the first is, what industry are you in? The second is, what is the name of your entity? And the third is, what is the length of seasoning? Now, how can we affect these things if we're in an industry that is, if I'm an electrician, I can't call myself a plumber, for example. So how does it make a difference what industry I go in? Well, for the sake of funding, there is a difference. For example, if we take a marketing and advertising company or a business management entity, so a company that's registered in the business management industry, to the banks, we're going to get a lot more money than if we take a bank that's registered in the real estate investing industry. And guess who all falls under the business management industry? Any person that owns a business. If you own a business, you can go under the business management industry, which immediately makes you more lendable. And so the name of your entity, that is also a very important thing. And so the last item is length of seasoning. Now, the length of seasoning is based off of how long you've had your entity open. And we have ways of being able to extend this when you're a member of our company. But for the sake of education, it's important to have an entity that has a couple years of seasoning at least. So these three keys: being in a safe industry, having a healthy name, and having a healthy amount of seasoning, at least 2 years. And so any business that is really looking to expand and looking to add funding to their overall model of expansion is going to use separate entities for different aspects of their business. As we all know, Microsoft is broken up into a whole variety of different entities. So is Google. So is all of these big companies. And so for you to own multiple companies in all of your overall business endeavors is not a problem. So, you're looking for money for real estate. That's not a problem. You don't want to close your real estate entity. You don't want to lie or misrepresent to the bank. That's not what we're suggesting at all. What you would want to do is create another entity that is in the business management industry that allows you to have a better overall lendability with the banks. As soon as you've been approved for it, you can then loan the money from your business management entity to your real estate entity or to any other company that you may own that is less lendable, because your business management entity is more lendable. You're going to get more funding through that, and then you can lend it to any of the other entities that you own.
Yeah, we've actually had clients come to us that applied for a business loan on their own before they came to us for help, and they were denied. Everything was all good. The numbers were good. Everything on paper looked good until they found out it was a real estate company. So when it comes to getting business credit or a business loan, doing this repositioning strategy is very beneficial, and it works for all of our clients.
So why using an LLC, S Corp, or sole proprietorship makes no difference. We're talking about two different overall types of funding today. That's business funding and corporate funding. And we're also going to lightly touch on personal credit. When it comes to unsecured business funding is not based off of any of your assets, and the way that it ties into your entity is in a way where you are personally guaranteeing it. So you are personally guaranteeing this credit, and that's why they want to look at your personal credit. However, if you should not pay the credit, they're not coming after any type of asset that you own because it's unsecured. So it's unsecured, meaning if you don't pay it, they're going to put a mark on your personal credit. And for all those who are interested in funding that does not show up in your credit under any circumstances, we're going to be covering the corporate credit here in just a few minutes. But when it comes to unsecured credit, the reason why it doesn't matter whether you're using a sole proprietor, an LLC, an S corp is because you're personally guaranteeing it. You're moving the conversation to beyond the limit of liability. So of course, when it comes to investing, if you're in real estate, you would always want to use like an LLC or an S corp so that you have that limit of liability. Well, you're not going to have a limit of liability in between an unsecured loan and the bank. You're going to have liability with the bank because that's why they're giving you a loan. They expect that you're going to pay it back. So that's a really important aspect to understand. Although you are personally guaranteeing it, as long as you pay it back, this credit will never show up on your personal credit. You'll be able to use the funding, and it will never hurt you in a negative way, and it will always be able to, you'll always be able to get access to more funding because this isn't showing up on your personal credit. If this was showing up on your personal credit, then you wouldn't be able to get access to more. So now you may be wondering, well, with all of this, will this work for me? This sounds a little bit complicated. I have to worry about the industry that I'm in. I have to worry about whether this is personally guaranteed. And although this sounds complicated, the truth is it's very simple. It's very simple. And this works for all of our affiliates. It works for hundreds and hundreds of clients every month that are getting started with us. Thousands and thousands of clients a year. Here are some of our top affiliates. You can see David Fagan of Icon Media Builders, and Dave Levinsky of Grow Think, and Alexis Neely of Eyes Wide Open Life, Chiara Petrogivana of Certified Life Coach. And so we have a lot of friends up here who also teach their clients about us. A lot of folks in the real estate, Brian Ellis and Mitch and Eli and Eric. So a lot of people in real estate that are looking for more money for their company and that are looking for more money for their clients. This works for them, and it works whether or not they're a new company, whether or not they're an existing company. You can get access to this type of funding, and you can leverage and you can build your business model. So we're going to dive more into the unsecured business credit. And when you're using unsecured business credit, you're able to build up to around $250,000 of this in a 12-month period of time. Now, as I alluded to earlier, it doesn't appear on your personal credit, and we are able to use the zero interest offers that the banks give us. Some of these offers are 6 months at 0%. Some of these are up to 18 months at 0%. The best part is that no collateral is ever required, and we can access and use these credit lines as cash without doing any kind of cash advance. So unsecured credit is really powerful type of credit, and I recommend you go ahead and Google it, and you will see that there is a variety of 0% cards that are out there from the big banks. There is a huge amount of banks out there that offer this type of funding.
Yeah, and the bottom line is that according to the National Small Business Association survey, nearly half, 43% of small business respondents said that in the last 4 years they needed funds but were unable to find any willing sources. So this failure to secure financing has caused 32% of businesses to reduce their number of employees and 20% to reduce employee benefits, and 17% were unable to meet existing demand. Now this causes people to utilize personal finances and personal credit more, which you can completely avoid if you just start using business credit accounts. In fact, how many people on the call, show me by raising your hands, how many of you are using your personal credit cards or you've used your personal credit cards in the past for your business? Go to the console, raise your hand if you've used your credit cards, your personal credit cards for your business, because I cannot stress to you enough how crucially important it is that you keep the debt off of your personal accounts and you keep it where it belongs on the business profile, on the business credit accounts. If you do this, you'll see that your personal scores will stay high. But if you continue to put your business expenses on your personal accounts, your personal scores are going to be hindered and they'll stay down. You have to transfer the debt over onto the business side.
Now, too many folks make this mistake. We often hear, I wish I knew about that a year ago, or what some of the other people are like, this sounds too good to be true. We've been in it a while, so we can definitely understand. We remember that nearly half, or 43% of small businesses said that in the last 4 years they needed funds and were unable to find any willing sources to lend. So it makes sense that people have that attitude, but using business credit lines is not a well-known resource, and it's extremely underutilized. So if you're needing reassurance, again, just go ahead, Google zero interest business credit. And remember, we aren't new to this field. We specialized in business credit building for 9 years, and we've helped and we've educated thousands of real estate investors. So it looks like a lot of people have come, and wow. So it looks like, just from the raise of hands here, and I'm just scrolling through, and just literally hundreds of people here have put their hand up, letting us know that they do use their personal cards for business. And so now folks on the call are very aware that when you're using your personal card for business, you're hurting yourself personally. You're making it more difficult to refinance and get more 0% offers in order to continue the 0% period of time. And it's really important to understand card stacking. Card stacking is the ability to use these 0% cards on an long-term ongoing basis. And that's what our consulting will do for you. That's what we do for you, is this whole card stacking process, which will first start with optimizing your personal credit, then establishing an entity, then moving into the applications and the negotiations and getting you the credit. And we just literally take the bull by the horns and do the whole thing for you. Now we're going to go into some training right now, and we're going to talk a little bit about your personal credit. So in just a minute, we're going to talk about your personal credit, because we want to help people that want to do this on their own. If you want to go out and you want to learn about this and you want to start getting access to your company, some funding, then you're going to be able to get some on your own. It may not be as much as what we get for our clients routinely doing what we do every single day and knowing what we know, but we're going to just go ahead and jump into this. So what you see on your screen here is the credit modules of a normal credit report. And we're just taking a minute to point out that, that there's different ones, the Beacon 5.0, the FICO Classic, the Fair Isaac version 2, and that there's a difference between a consumer credit report and a tri-merge bank report. Now, when you work with us, you're getting an actual credit report so that you know the actuality of what's going on in your credit. Now, when you go online and pull your credit, you're only getting a consumer credit report, which only gives you half the picture. Your consumer credit report does not give you the whole picture. It only gives you a small, confusing portion of the total data collected on you as a user of the credit system. And so here's an example of a full page of your normal credit report on a consumer reporting agency that you would find online. And you can see that on this entire page, they only show 2 accounts. And they're giving us very little overall data. Very few data points. There's like maybe 5 or 6 overall data fields here. But then if you look at a bank credit report on that same one page, they're fitting 10, 13 different credit accounts on there, and they have a whole host, a multitude of data fields. And so there is so much more data that they're giving the banks than that they don't allow us to see. And there's a few that on the consumer report don't show up at all. So on this report, there's a few things that won't show up at all. So you as a consumer can spin your wheels trying to change, like when an account was opened, if it was open at the wrong time, or if it doesn't have a limit that's reporting properly, or if it's reporting as an open card instead of a revolving card, or if it has the wrong amount of seasoning. Many accounts have the wrong amount of seasoning. And so all of these items are items that we're going to help you with. Now, none of them have to do with bad credit. This is just taking someone with good credit and giving them great credit. Taking someone who doesn't understand why their scores are artificially depressed when they actually have good credit. And so those folks may have been experiencing denials and not receiving the approvals that they're desiring. And what we're here to tell you is that a few tweaks to your report, which have nothing to do with credit repair, nothing to do with disputing anything, a few changes to your report and your scores will soar up, and you will have excellent personal credit, and you can get all kinds of access to funds where they look at your personal credit report first, like they do with unsecured business funding. Although none of the funding that we create reports to your personal credit report. And let me repeat that. None of the funding that we set up for people will report on your personal credit report. They still require you to have good personal credit report before approving you. So that's why if you go through our program, you end up with good personal credit scores, even though the point of our program is that we are building you business credit. We are building you business credit accounts that you can invest into your company, and we are also helping with corporate credit accounts. So we have a few screenshots here of, again, here is an example of a client that opened up their account in 2007, but yet it's only showing 25 months of seasoning because they report these in two separate fields. If we go back to here, they wouldn't even report it on this credit report at all. This credit report wouldn't even cover that. So only the banks know certain things. For example, in your balance field, whether it's going to report as a revolving account or an open account, in other words, what account type makes a big difference. This report isn't going to even tell you that. So as a consumer, if you're wondering why you're trying to get your credit to work better and you're just spinning your wheels, that's probably why. Personal credit positioning is really important. It's very powerful. What we do with our clients is we go through a whole host of different factors that will affect your overall lendability. And once we've addressed these factors, clients become highly lendable. Highly lendable. We're getting them $30,000, $50,000 accounts just on one account. And then we get 4 or 5 of those at one time, and that's just one batch of funding. And then we do the whole process over again. And so there's a lot to personal credit positioning, and there's a whole process to getting this type of funding. From doing the strategic the consulting ahead of time, to which would include the merging of accounts, increasing personal credit limits. There is a whole variety of different things that we're going to do to help enhance someone's scores. And again, it has nothing to do with credit repair, but to enhance their scores, there's a whole variety of things that we're going to do. And then we would move forward with the overall application process so that we can get them as much funding as possible. And so before that, we would then advise our clients to carry no more than a 35% ratio on their personal credit report only on credit cards. So on a credit card, you want to keep that at 35%. On a mortgage, it doesn't matter. On a car loan, it doesn't matter. On any other type of loan that's an installment or term loan, it wouldn't matter.
And when you get business credit lines, it won't matter either. You can carry a larger balance on the business credit account, but when it comes to personal, the banks like to see it around the 35% debt to credit ratio.
And that's the whole point. That's the whole point, is that on business, you can leverage the entire account. It's not going to count against you. And we're going to be able to refinance that and do the card stacking process of moving one balance to another 0% card and keeping it on 0% long term. Our process shows you how to card stack using 0% long term. And of course, it's important to have a lendable entity. Now, there's a lot of negotiations that go into what we do, and the negotiations are when we're actually in the during the application process. So during the application process, well, let me ask folks on the call a question. How many times has someone applied for something and then you got declined and you didn't know why you got declined, or you got approved and you didn't get approved for the amount you wanted, but you got approved for an amount, and that was just all you never found out why you got that approval or that declination, and this is a pretty common thing. People apply for things they don't know. The banks don't ever follow up and tell them why they only got this. And the best that happens is they get some type of cryptic letter that gives them a one-liner telling them, why they got what they got. But the long and short of it is, people don't realize how easy it is to call and speak with the bank and to essentially to negotiate directly with them. You can negotiate directly with the banks, and you can speak with them, and you can many times completely sway their decision and dissuade any fears they may have about you so that you get a bigger approval. And this is what we do all the time. We have to get on the underwriter's level, and we explain our client's business model, what they're doing. We have so many great clients with great business models that all we have to do is effectively transmit that to the underwriter, and the underwriters are ready to approve them.
Yeah, in many cases, it's systematically denied. It hasn't even been reviewed by a human being yet. So it's just as simple as getting on the phone and communicating with the underwriting team.
So, and if for those who are interested in working with us, we have a whole dedicated team that does this, and this is what they do. There's a priority put towards the negotiations so that the negotiations can go through as soon as possible. It's really important that you follow up multiple times with each bank, and you want to leave a couple days in between each follow-up, but you need to follow up multiple times, ask to speak to an underwriter and speak to them and plead your case and explain your credit. Let them know that you know about your credit and that you are a good bet and that underwriter could approve you for a $100,000 loan, or they could decline you. It is 100% up to them. They have sweeping powers when it comes to approvals on your personal credit or on your business credit. A part of business credit and using card stacking is removal of inquiries. Now, it's important to note that this is only meant for business inquiries. This is not meant for personal inquiries. When you apply for a personal credit card and you're approved for it, they're going to put an inquiry on there because you were approved for it. When you apply for a business credit card, there's no way that they can leave that inquiry on your personal credit report because it's a business account, and so it becomes a temporary inquiry. And so we show folks how they can remove those. And also, it's important to understand the difference between a hard inquiry and a soft inquiry. When you as a consumer go and pull your report, that's a soft inquiry. When any kind of bank or lending institution that actually extends you credit, when they pull your report, that's a hard inquiry. And so one of those will pull your scores down. A hard inquiry will pull your scores down by a few points, whereas a soft inquiry won't affect your scores at all. And when you do have high scores and your scores stay nice and in the purple zone, which is nice and high 700s, then you're going to receive the best offers, from insurance to business loans to better mortgage rates. I mean, there's a whole variety of business suites and merchant services that are just a lot easier to use, and in many cases you can't use them at all if you have bad credit. And so it's really important to just have good credit, especially if you want to do this long term. You want to use $250,000 and you want to use it long term. There's many banks offering this type of funding. So it's definitely possible. It's doable. I myself have over 700,000 of this type of unsecured business credit cards. Many of them are at 0%. I'm constantly changing them and updating and trying new ones using the cash off strategies. I'm constantly just trying new accounts. And so anybody can do this. If I can do this, if Mike can do this, if all of our clients can do this, then anybody can do this. You just have to take the time to work on your credit, to keep your credit in good standing so that you can qualify for the business funding. Then when you qualify for the business funding, you need to keep all your accounts in good standing and continue to use those 0% accounts, continue to do the card stacking process responsibly and effectively. Don't invest into things that require you to pay back really over a really long period of time and really slowly. Be smart with your investments, and you will be able to repay, and you'll be able to build more and more of this type of funding. This is the credit process. You start with applications. Applications is when we're going to look at your overall report. We're going to look at your scores. We're going to get you into a lendable shape and apply. This happens right away. Then we move you into negotiations, where we start negotiating, pleading the case, getting the larger amounts. We're going to negotiate each account 7-8 times. Then it comes to inquiry removal, to removing the business inquiries, back to applications, back to getting you more credit. This is the credit building process that's going to build you up to $250,000 of funding. And there's a whole variety of different things that you can use this funding for.
Yeah, we have a lot of clients who are investing in real estate. They're using the money for gap funding or like a bridge loan. Plenty of clients are using it to go to different JV events, seminars, boot camps. Also, you get free travel, which is pretty cool. If you start using these accounts, you build up your rewards points. You'll be able to travel to go check out different properties or to seminars or whatever you really want to do.
And another really awesome benefit to using business credit is that you can use these accounts as cash, which will allow you to earn a lot more per deal, especially since it's at 0 interest. So you're looking at 100% or more in ROI without having to deal with a hard money lender, and you're not doing a cash advance. You're doing a great cash out method that I have personally used myself many times, because quite frankly, who wants to pay 20% for a cash out? Who wants to even pay 10%? No one. That's why we have a way of withdrawing cash. And with some business credit accounts, withdrawing cash will be totally free, but with some there will be a small fee to withdraw the cash from the account, and we're talking like a 1 to 2%, maximum 2% fee. And so most of them you don't even have to pay that fee. But our clients don't even mind paying the 2% fee, as opposed to paying 12 to 20 points for a cash advance or to a hard money lender. So these cash out strategies are worth their weight in gold. Literally. So doing this specific transaction, for example, you could pull $40,000, $50,000, $100,000 off of a card. There's amazing ways of, there's different programs out there that will help you access the cash right off of a credit card and allow you to spend it on basically whatever you want to. And having cash access is huge, and being able to spend on whatever you want is also a very important aspect of the program. And again, that's something that we're gonna provide to all of our members, whether you join pay-as-you-go program or with our membership. Either way, you're going to get access to these strategies to be able to pull the cash off, just like Joe, and being able to get access to 140,000 here of cash and being able to invest it back into his team and into his company. And we just have so many different clients that sing our praises because they were able to get access to hundreds of thousands of dollars, and they were able to really leverage and boost their business model beyond what even they thought was possible. So the qualifications for this are fairly simple. You want to have around a 35% credit card utilization ratio on your personal credit cards. You want to have a lendable entity that we talked about, which is easy to reposition if needed. And you want to have pretty much none when it comes to negatives or derogatories on your credit report. We say minimal because there are times where clients have really strong credit and they have one or two minor issues like a late payment, and we still are able to get them hundreds of thousands of dollars. But we also want to just be really upfront and clear with people that if there are negatives and derogatories, those can be deleted. It just takes a little bit of time. And so while many clients come with a situation where there is a negative or two, it can be deleted. Understand that that's something that is that's beyond what we would normally be doing. So that's a little bit of a different conversation. We can help get that deleted. And we can still move forward and get you funding. In many cases, in a lot of cases, clients, if they have a strong profile, they're able to get funding regardless. But we just want to be totally upfront and let you know that if there are derogatories, we're going to work with you to help you with that. So if your scores are in between a 680 to a 700, then that's going to be an ideal. That's going to be an entry point. If it was ideal, it would be 750 to 770. But a lot of clients are coming from 680 to 700, and we're able to easily boost and get them qualified for 30,000 in their first round and 150,000 over the next couple months. And so we have a lot of clients that are coming to us with higher scores, that are maybe a 720 or a 730, and they're getting 100 to 150,000 within the first 30 days. So it all depends on exactly where you're coming to the program. And if you work with us, you will get the higher amounts because it takes a professional understanding and implementation of these strategies to get the larger amounts right away in the beginning. Now, a lot of folks are going to do this on their own, and they're going to see success. They're going to get a lot of funding. But understand that we'll just get you a lot more. This is what we do every day. So far today, we've talked about business credit and personal credit and how those two tie into each other. Now we're going to talk about non-recourse corporate credit, where there's no PG required, no personal guarantee, no personal credit check. This is the best form of asset protected funding that you can get. And that's why it's really important that we go over this. And so the Dun & Bradstreet corporate credit is the funding that all business owners are moving towards. So when you first get started, you can get hundreds of thousands of dollars of funding through the business credit that we were talking about in the earlier part of the call. But then companies segue into corporate credit. For example, here at Fund and Grow, we've bought our corporate buildings using corporate funding, which is 100% in the business's name. It's not in Ari's name. It's not in any person's name. It's in the business's name, and it's not attached to a social security number or to a credit report. It's only attached to Fund and Grow, the corporation. And all businesses want to have access to cash and to funding 100% in the business name without that personal guarantee. And we work all of our clients into this lendable place where they can get access to corporate credit as well as the business credit that we were talking about earlier. So it's great to be able to get access to $250,000 of business funding, but it's even better when you're getting hundreds of thousands of dollars of this type of non-recourse credit from Dun & Bradstreet. And this is it's 100% non-recourse. It's not going to come back on you personally. It's based purely off the company. And so these are vendor credit accounts. And we're going to show you how to build a Paydex score. We're going to show you how you can get these guaranteed approvals, even if you have bad personal credit. Because your bad personal credit, it has nothing to do with corporate credit, it wouldn't hinder you from getting this type of credit. So corporate credit, it doesn't matter if you have good personal credit, bad personal credit, it doesn't matter. You're going to get access to it no matter what. And with all of this type of funding, you can use it for a variety of different things. You can invest directly into your company. You can replace high interest personal loans that you may have. You could yourself become a money lender. We have many clients who, just because it's so easy for them to get funding through us, they become money lenders themselves. And so we have all of these different things that clients are doing, and they're coming to the Better Business Bureau and online places, and they're posting that stuff. And so here we have 3 different clients right here on the Better Business Bureau that are posting this. We have Monique, and we have John, and we have Anjum, and so they come directly to the Better Business Bureau. We encourage you folks, go and check us out online, and understand that we work with hundreds of new clients every month, usually around 250 new clients every month. And so there's just a lot of people that we're working with. And so you're going to see a lot of different things out there written about us. And you're going to see a lot of reviews. Here's another review from Seth, who's up to 350,000. So you can see he's well over that $250,000. And he's been using our program for a few years. And he just mentions they under-promised and over-delivered. And so this is super, super powerful stuff, because if you look, that Seth he wasn't even using his personal credit. He was working with his business partner. So his partner was working with him, and through his business partner, he was able to get this credit. But now, because Seth was working with us, now he's able to get business credit in his name as well. So he's able to get even more funding, because not only did we work with his partner, but we also worked with him. Now he's lendable. Now he has 2 sources of being able to get funding through him and his partner. And this is a really big thing. Being able to use a credit partner is a big part of being able to get access to more funding if you have a business partner that you work with. You might be married. You might have a son or a daughter or an adult, a brother or sister that you work with. And no matter what the case is, if you work together with a credit partner and you get along good with them, then you can use them to help increase your overall lendability. And we're going to get a little bit more into that, into how using a credit partner could possibly help you, because using a credit partner will specifically help you if you have bad credit. Now, this is not like giving up equity within your company. This is not like using angel investors or crowdfunding. Using a credit partner is a inexpensive and safe way of being able to get access to more funding. So, and this is what people do when the bank says no. If the bank says no and they're unable to do it, a lot of times they'll work with a credit partner. It could be their own wife. A lot of husband and wife real estate investors don't even ever think about using the wife's credit. And the fact is, when you're responsibly using your credit and you have 2 partners to work with, you can really double the overall results that you get, and you can really receive that funding incredibly quickly. And that's very powerful. So it's a good thing that you're on this call, because otherwise you may not end up knowing where to go. You may stay trapped in high interest loans, or you might have thought that you had to put your assets on the line. Imagine that. How many business owners are right now putting their assets on the line, or paying daily on hard money loans, or factoring using their merchant receivables? How many folks on the call, you don't have to put your hand up, but on the call are using merchant factoring? All too often, clients are coming to us using these super expensive forms of borrowing.
And I'm sure you've all seen the show, The Shark Tank, where you come up with your idea and you pitch them, the investors, for funding, and they take 50% of your company and give you 50 grand. So that's not at all what we want you to do. We want you to have full control, be in the driver's seat, and get the funding that you can use at your leisure, how you please.
Here's a more detailed breakdown. And also just a reminder, we're going to open up the discussion for a Q&A, and then we'll show you in detail how our credit tracking view and negotiations process works. So make sure you stay on to see that part, and we'll send you some special bonuses also. So with the 0% business credit, the reason we say 50 to 250,000 is because we're getting around 30 to 100,000 on each application batch. And during the 12 months, we're going to apply around 3 to 4 times for our clients. So that's, about 5 different, 3 or 4 different application cycles. That's going to be around $250,000 of funding. Now, there's many clients who actually get above the $250,000. It just varies based on your credit history. So that's why we have this, this range. But over the course of 12 months, clients, if you have a good credit score, are going to build up to the $250,000 of funding. And you see all of the different links of the chain that are all needed. You're going to need our coaching to build this type of funding. So many clients are too emotionally tied to their situation, and they aren't able to clearly see the steps needed to see the success in receiving the funding that they're looking for. And so we do that by working with the client for a 12-month period of time. And we're talking about online consulting with over the phone, over fax, with Skype, whatever you need to. You'll have access to your financial consultant that's going to keep you informed along the way. In fact, our entire team has gone through many trainings and certifications on communication, on FICO, on credit, on business funding, and on understanding credit reports. And we really pride ourselves on this life-changing customer service that's helped so many small businesses. And we really love receiving all the testimonials from our clients that you can see online. So we've earmarked this overall value at $3,500, and this is not what we're asking people to pay today. This is just the value that we've earmarked, what other companies are typically charging. And so we have all of these different aspects to the funding chain, having an entity that's in the safe industry, getting the cash off the credit accounts, removing the credit inquiries, using the corporate credit and the hundreds of thousands of dollars that are available through the non-recourse corporate credit. All of these things are incredibly powerful, and we're definitely not asking you to pay what other companies are routinely asking clients and what other clients will routinely pay through other companies. And so we also mentioned at the beginning that we have some bonuses for those who stay on to the end of the call, and those ones are free. Now, these bonuses that we're going to go over right now are bonuses for those who want to work with us. So if you want to work with us, see the certificate on your screen, but this will entitle you to the financial management tool upon signing up for our service. We're going to give this to the first 15 people for today that turn this in. And so you'll get access to the software that ensures that no account ever hits above an interest rate, above a 0% interest rate, so that we can continue the card stacking, and it manages your business and personal expenses so that for maximum ROI in your business. That's really powerful software. So the second bonus for anyone who gets started today is access to our newsletter database. And this is normally only for subscribers. So what we're doing is we're giving away the first month of this subscription for all of those who get started on the call right now. So you could take a screenshot of this, and this will entitle you to a free month of this newsletter database program. And that will entitle you, if you stay part of that program and you'd like to be part of that subscription, then you'll receive our free condo stay. And we have clients that use this for a variety of different things, from going on vacation to going on seminar. And this will entitle you to a complimentary condo where you can choose to use it for 7 days. In 1 year, you could split it up and do 3 days here, 4 days there, however you'd like to do it. We have clients that have used the condos in Hawaii, in Florida, anywhere. If you want to go to the gas lamp district in San Diego, just let us know. We have all these different areas that you can go to. And if we don't have a condo there, then we're going to rent one for you, and it's going to be badass. It's going to be a nice condo. So we have clients that go on these work business vacations, and they send pictures of themselves, and we get so jealous in the office. But that's part of one of the programs that we offer. So the very last bonus that we have is our partner upgrade. So if you are working with a partner, like we were talking about earlier, you are going to get a buy one, get one offer, which is a $7,000 value today. So $7,000 value. And what would all be included? Well, like what we talked about, what you would be receiving in this package is an entity, then the batches of funding building up to $250,000, which of course is based on the credit consulting and what we do for you. And you can take a screenshot of this, as well as the inquiry removal template guide, as well as the cash liquidation maximum 2% fee, as well as the Dun & Bradstreet corporate credit and the financial management software, the 7-day condo stay, if you're part of the premium newsletter subscription, as well as the buy one, get one offer, which is the $7,000 membership partner upgrade that we just showed you. Take a screenshot of that as well. So all of this is included. Of course, the most important part is the access to $250,000 of funding, but it's important to know that we're willing to do all the work. All these other items are knowing that we're willing to do all the other work required that goes along with getting you this credit. Someone's got to do the work. Someone's got to do the work for that business. If that business is going to get access to funding, that's what we do.